And here's our first one for today. Claire from Rogers asks, can you tell me more about indexed universal life investments? I've heard some about them lately, but I don't really know what they are or how to know if I need that in my portfolio. Claire, thanks very much. You're definitely going to hear a lot about them because they are advertised quite a bit. And John, I think there's been a real proliferation of this online and social media.
Yeah, there are apparently, from what I understand, some multi-level marketing organizations or strategies like that to market and push these things. And you always have to wonder, okay, so is this good for me or is it good for them?
Right.
And so, Index Universal Life has some positive characteristics to it. It also has some negative characteristics to it. It is just like any other financial product. It doesn't have a personality. It's not good or bad. It is a tool, and if the tool is used properly, it can be of value. And if the tool is used improperly, it can wreck your financial future if you depend on it. So I think it is with that context, Scott, that we jump into talk about indexed universal life. And let's kind of play off of the traditional whole life insurance policy. The traditional whole life insurance policy has lots of fixed attributes to it. The cash value is guaranteed. The death benefit is guaranteed. The interest rate is likely guaranteed, although they don't disclose what the interest rate is in a whole life policy. But an index universal life policy is basically exactly what it says. It is tied to an index or the return of an index in some way, shape, form, or fashion. The details of that can become convoluted as to how much of that index you actually get in terms of appreciation of the cash value. But it is at its heart a life insurance policy. It is a combination of decreasing term insurance and increasing cash value life insurance. And so when you think about this, you have to ask yourself, okay, what is it that I really am trying to achieve with this? And life insurance is for protecting your income. It is not for necessarily the accumulation of money, although it can serve that purpose if you run out of all of the other options to save money. But I've not ever really run into anybody that's run out of all the other options to save money, Scott. But there is a significant difference in an investment and an insurance policy.
Yeah, so I think you need to separate the two when you talk about insurance and investment. So let's take on a look at what an index universal life policy has from an investment perspective. And John talked about it. You're really talking about being tied to an index. So when we say an equity index, we're talking about something like the S&P 500. That's the one that most people are familiar with. It's also the one that's probably going to be the most common, but it's typically going to have a cap on the upside. So in other words, if any given year the S&P 500 index does 10%, there may be a cap of 6%. And these are just hypothetical, not certainly guaranteed for sure on any given product. But in other words, if the market does 10%, you only get 6% of that. So it's limiting, in that case, the upside of your investment. So from an investment perspective, we don't typically wouldn't think of using an index universal life policy for its investment opportunity, because of those gains being capped, John, and they may not give you the growth you need to achieve your financial goals.
And I think that's where the rub comes in as far as we're concerned with Index Universal Life and how it's marketed, because online there are a lot of either unqualified or slightly qualified people giving advice, telling people to take their money out of their 401k plan, pay the taxes on it, put it in the Index Universal Life, because Index Universal Life never goes down. And there is some validity to that statement that it never goes down, but there's also the dollar cost averaging that you're doing inside your 401k plan that ultimately works to your advantage if everything, continues to go up as the market has historically done. I think that there is a lot of fear-based marketing that is done on Index Universal Life, trying to pull money away from 401k plans, and not to mention the fact that if you stop putting money in your 401k plan, guess what you also don't get? The company match,
right? Which
is lost money. So there is a lot there that to a person who is going to react knee-jerk style or emotionally about the market volatility that's going on right now, you can make Index Universal Life sound really good. You can also make a sow's ear sound pretty good too,
Yeah,
you know.
right.
But it's just not necessarily the thing for you to do to replace any other type of investment that you might have, because, oh, well, there's going to be taxes due on that money, or it never goes down, or whatever their excuse is for trying to market that product.
Yeah, and I think the answer lies in her question, because she says, how do I know if I need it in my portfolio? Well, the guy trying to sell it to you without knowing a thing about you is certainly not acting in your best interest, of whether knowing if you need it in your portfolio is really a foregone conclusion. So said another way, if you're seeing a commercial or a sales pitch for a specific investment product, no matter what that product is, that is a red flag, because we don't believe there's a magic investment. There's not a one-size-fits-all approach. As John mentioned, I really like the way you said that. It doesn't have a personality. It's not a person. It's not good or bad.
That's right.
It depends on how it is used and who needs it to be used. Pitching a product over a plan is wrong.
So let's talk about how it could be used. A couple of things that I think about a permanent need for life insurance. An index universal life insurance policy can provide for that definitive need. However, you need to understand also that as you get older, the cost of insurance is going to continue to go up in an index universal life policy. And so what's going to happen is internally that might outstrip the actual premium that you're paying, and so your cash value could go down. If the cash value goes down all the way to zero, then the policy lapses and you don't have any life insurance and you don't have any cash value. So that's the drawback of index universal life. But if it is able to be structured where that permanency is in place, where you're funding it with enough money, then it can be a good value as far as the cash value life insurance category goes. So where can you use cash value life insurance? So if you have someone who has special needs and you don't have the means to fund those special needs after you're gone, that would be, a necessity for you to fund into your later years, 60s, 70s, 80s, something like that. Cash value life insurance might be a solution there. Another area could be if you have an illiquid business and you're going to pass that business on to your family, and there would be estate taxes involved in that business. Then to provide the liquidity for those estate taxes, index of universal life might be a solution there. But Scott, I think we're nibbling at the edges of a traditional financial plan when we talk about this product. It is certainly not a mainstream product.
Right.